Okay, guys, following on from yesterday's video, we can see that the expectation was to see a small move to the downside, kind of find support on the kind of 50 SMA area, and then rally up to our downward trend line. So if I hit play just on what actually unfolded here, you can see that we kind of consolidated down, we moved down. We actually came down a little bit deeper than the 50 SMA there, and then right back up to our trend line. Since then, we still find support on the 50 EMA and the 50 SMA, and we do find ourselves consolidating right down in those ranges of the 50 EMA and the 50 SMA at the point of today's video, right? We can kind of see exactly where we are. So in today's video, we are, of course, going to be jumping into the technical analysis on the 1 hour, 1 day, and 1 week timeframes, just giving you guys a brief update as to kind of what is going on with BTC. Let's roll the intro and get right down into it. Okay, guys, so here we have Bitcoin paired up with USDT. This is the 1 hour Binance chart. And as I kind of briefly said at the beginning of the video, obviously our expectation was to come down to the 50 SMA as per last video, and then of course up to the trend line here and get rejected. This very much is still true. I'm looking at this though as a potential retest of this trend line, and I think we have the potential to break it from where it's currently sat. And the reason for that is we can see a nice strong movement up to it. We have a consolidation down to support, and support obviously has been moving up with the price action as well. So the 50 EMA and the 50 SMA. At the moment, the red line, the 50 EMA, sits at 42,991, with the 50 SMA sat at 42,919. And so the support is likely to get found really, really soon. I'm not expecting us to kind of move down a lot further here, a tiny little bit maybe, and then rallying on up. And my expectation will be to breach that trend line. I think the trend line in itself is quite weak. Now, I'm not looking for us to breach the swing high at 43,882. That's the white line that you see on the screen here, but it is a possibility. So we'll keep a close eye on that. Okay, if we can breach higher, that's going to be great, but it's really not going to be giving us a lot of fuel to the upside, in my opinion, simply because of the overlapping structures of candlesticks that we see here. There's not a lot to give us a lot of hope for big bullish breakouts, specifically on the weekend where volumes and demand are usually lower. If anything, we're likely to see more sideways trading. So if we can get a break above here, I think we'll just come all the way back down again, and we'll just continue to range sideways. So I'm not expecting huge amounts of volatility over the weekend. I'm not expecting us to see, big swings to the upside, big breakouts, or at the same time, big breakdowns either. I think we're just going to kind of get stuck into a range and trade sideways. Okay, so for the smaller time frames, that's kind of what I think the next 48 hours will probably look like. And you can see that we're consolidating on this range here between the 43,045 and 43,287, right? This was a previous area of support turned to resistance, and basically it is still our resistance, but this consolidation that we're seeing within it actually shows us that there's a little bit more demand than the supply can handle at this range, basically indicating that this is no longer really resistance. Okay, so the resistance that was there, I think, is now void. It's now void. It's no longer really the same as once was. So I can go ahead and move this over here, and we can say that that's isolated to what was previously happening a couple of days ago. In fact, I could probably just remove it from the chart so it doesn't confuse us any further. Now, I do think we are kind of getting ourselves caught up in a bit of a wedge in here. If I go ahead and draw another trend line, again, this is going to be quite subjective, but if I draw this in, you can kind of see we're kind of coiling up into this little range here. If we hold the 43,882, then we can adjust this a little bit and we'll still be fine within its range. And I think all we're doing here is getting ready for a next big move, which I do think will be consolidation to the downside rather than to the upside. Okay, so it's going to be one of those things that we'll keep a close eye on. Okay, so on the 1 hour time frame, there isn't really a lot to kind of get excited about. Now, the stochastic RSI is approaching the oversold area, but it's not yet ready for reversal, so we are likely to see a little bit more negative price action before beforehand, but I don't expect it to be terribly too much. Of course, if it is, and we test the 200 EMA, then a little bit unexpected, but again, we're still within the range, and I would consider that a bit of a win regardless. If we take the stochastic off and we throw in the divergence indicator, you can see some bearish divergence here. Let's just bring this up. You can see bearish divergence on the RSI and price action side. This is coming in here where we can see there's divergence in the price action versus the RSI, and this is showing us with this bearish move to the downside here. Now, as far as I'm concerned, this is kind of already played out. It's really minor. It isn't anything major, but it's worth kind of noting that if we were to see a fueled move to the downside and we were to come to the 200 EMA at 42,485, then the bearish divergence, I think, just had a little bit more room to play out. But the stochastic RSI is kind of showing us with us reaching that area of exhaustion, and we will start to see reversal upwards rather than downwards. So I say, not expecting massive moves to the downside, but if we do lose the 50 SMA, the next stop will be that 200 EMA. Okay, divergence is an interesting one to keep an eye on. Volume profiles here are very, very low. So we note that price action's going down here, and whilst the price action is dropping down, we can also see that the volumes are dropping down. That shows us that there's really a lot of weakness in this move. It shows us that there isn't much of an appetite for selling pressure. Okay, and so that ties into that stochastic RSI correcting down the way that it has done. And so with the stochastic approaching the oversold area, bearish divergence kind of leading us into this move, support to be found at the 50 EMA, 50 SMA. I expect us to find reversal here, and we'll start to see hopefully an increase in the volume side for BTC on the 1 hour time frame. Okay, so that's kind of the hourly. There isn't much more to it than that. It is kind of business as usual over the weekend. Saturdays are going to be usually quite slow, and Sunday the volatility usually picks up a little bit. But let's go ahead and take a look at what's going on with the daily chart, right? So the daily chart shows us still with our bearish structures, right? We are still looking for a move down towards 35k under a 3-wave pattern on Elliott wave theory. It will look like this. It'll be testing out the 200 EMA, currently sat at 36,122. At the moment, we do find ourselves with brief support on the 50 SMA. That's $42,905. Obviously, in order for us to kind of see these moves to the downside, we do have to lose the 50 EMA and the 50 SMA. So 42,040 for the red line, that's the EMA, the 50 EMA, and the yellow line being the 50 SMA at 42,905. So at the moment, with support being found here, we might find that the smaller timeframes are able to rally us up a little bit further to the upside, but we are not going to see significant moves, in my opinion, upwards. Instead, we are looking for moves to the downside, and they are quite significant where we lose the 38,555. But obviously, I want to caveat that low of 38,555 is the potential for a double bottom. Okay, a double bottom being the minimum expectations, and we move down there, we bounce from 38,555, and then we can kind of talk about bigger moves to the upside afterwards. Okay, that's a possibility. However, it's one of those that we won't know until we kind of get to that point, but we'll keep a close eye on it regardless. If we were to see and lose these areas of support, 50 EMA, 50 SMA, and maybe even this little range that we see down here, let me just draw it in, this little run right here at 40,222 to 41,253. If we were to lose this range, the bulls are going to be looking at double bottom scenarios at 38,555. And obviously the bears are looking to lose all of those, and specifically the bears will look for 38,555 to get broken. So taking a look at it from an objective point of view, we have an overlapping structure at the moment. We're not in a trend-based structured move to the upside according to Elliott wave theory. Smart money concept shows us with this premium area of rejection where we're currently finding a lot of resistance at the moment. So there isn't really a lot of things to get us kind of really hyped up about bullish movements to the upside. Obviously, a lot of people will be looking for higher highs and higher lows on the most recent candlesticks, but there isn't a lot of that going on either. So for the bulls, there isn't a lot to kind of get rallied up behind. So it's kind of unfortunate. I think the bears have a little bit more to be excited about for Bitcoin at the moment. Smart money concept shows us with fair value gaps all the way down here towards our equilibrium. bottom, and our 200 EMA. This is the obvious area where we're likely to be heading towards. And of course, you know, this is going to be something that takes some time. It's not something that's going to happen instantaneously. It'll take weeks to kind of get down there, in my opinion. So patience, as I said yesterday, will be key for this one. But a move down towards 35k, I think, is the next kind of major pit stop. Bouncing from here, moving back to 40 before dropping down again, losing 35 and heading down to 30. 30k is the area that I think we have to hold. So if I come over to our weekly time frame, here you can see that we have some interesting ranges. Now, I've drawn these on in gray, but this little one right here at 30,330 to 31,818, this is the area of previous support turned to resistance. We broke through it, but we haven't come back and retested it. This is the area that I think we are likely to test and find as support. So this is a pretty significant move. From the high down to this range, we are talking approximately 37%. Okay, it's pretty significant. It's not a kind of 40% move. It's not a 50% move. If we were to see those, then we are, of course, talking more about going back down to $24,000 if we want to see a 50% reduction, or if you want to see a 50% reduction in the price action of BTC. Now, the interesting thing that I do have here is a curved line on this chart. This is actually Bitstamp data on a weekly, guys. And if I connected all of the peaks and all of the troughs, right? So all of the low points for Bitcoin's price action here, and it creates this curved line. Okay, this curved line is an area that did have run the possibility of us coming down towards 10 and 12k at one point in time. However, because of where we sit right now and the time that it would take to come back down and retest this line, it would indicate to me that there will be no new bear market low point for BTC. Okay, so looking at this now, I would say it's very unlikely that we're actually going to lose this 15,479 area. This is a bear market low that's anchored in. And if we take a look at previous history here, you can see that what we had previously was the first capitulation event not touching this trend line, and then a second capitulation event coming down and touching this trend line. Okay, so if we go back again even further, over to the previous bear market lows over here, for example, back in January of 2015, you have the first capitulation, doesn't touch this trend line. We bounce up, we come back down, and we test that trend line on a second capitulation. Okay, so we can see this twice. Bear market low, second capitulation. And so what we've got going on here is we've got a bear market low. Are we going to come back down and have a second capitulation? And when does that likely unfold? Is it going to be a quick move coming back down into these ranges? Are we just going to completely void it now and change all of this up? I will also kind of put out there, and guys, and let you guys know that this is a curved line, which means I can adjust it accordingly, right? I'm just tried my very best here to connect all of those low points to make it kind of, you know, fit the history. It doesn't necessarily mean that it's a right positioning. So it could be that this curved trend line has to adjust ever so slightly more. And I can do that by adjusting the curvature of our line here as an example. And this in itself could then bring it up and show us with a test. For example, if I bring this in, a test on this line right here at that $24,000 to $25,000 as a second capitulation event. Okay, so I'm not saying that I've got this exactly right on the chart, but what is showing us is that there is always in the history of Bitcoin a first capitulation and then a second capitulation. And if we see these things, then that is likely to be where we head for BTC. Maybe I'll put this into a better video and not into kind of just a standard kind of TA update video. And maybe I'll do a whole dedicated video on the capitulation events for BTC. But for now, guys, I think that is going to wrap up today's video. So why don't you check out this video, though, where I'm discussing the potential for Chainlink and the future that I think is incredibly bright and incredibly fantastic for many, many retail investors.